On May 22, 2010, a seemingly trivial transaction took place that would forever alter the course of financial history. Laszlo Hanyecz, a programmer and early Bitcoin enthusiast, purchased 2 pizzas using 10,000 Bitcoins. At the time, Bitcoin was a nascent experiment, its value barely a blip on the radar of the global financial system. The pizzas themselves, ordered from a local Papa John's, represented a tangible manifestation of Bitcoin's potential as a medium of exchange. This transaction, now etched in Bitcoin lore as Bitcoin Pizza Day, marked the first documented instance of Bitcoin being used to purchase goods in the real world. It was a watershed moment demonstrating that this fledgling digital currency could facilitate transactions beyond the confines of online forums and tech circles. Little did anyone know that this seemingly ordinary purchase would herald the dawn of a new financial era. The 10,000 Bitcoins used to buy those pizzas would be worth an astronomical sum today, a testament to Bitcoin's exponential rise in value over the years. However, the true significance of this event lies not in the price of Bitcoin at the time, but in the precedent it set. It was a powerful proof of concept demonstrating that a decentralized digital currency could serve as a viable means of payment. This seemingly mundane transaction planted the seeds for a financial revolution. The early years of Bitcoin were marked by extreme volatility and widespread skepticism. Its price fluctuated wildly, soaring to new heights one day, only to plummet the next. This volatility, while unsettling to some, was to be expected given the nascent nature of this new technology. Bitcoin was an experiment, a bold challenge to the established financial order, and its path was uncharted. Critics were quick to dismiss Bitcoin as a passing fad, a speculative bubble destined to burst. They pointed to its decentralized nature, its lack of government backing, and its association with illicit activities as evidence of its inherent flaws. The media often portrayed Bitcoin in a negative light, focusing on its use in online black markets and its potential for money laundering. Despite the skepticism and the volatility, a growing community of believers continued to support and develop Bitcoin. They recognized its potential to disrupt the traditional financial system, to provide a more transparent, secure, and accessible form of money. These early adopters, driven by a mix of idealism and entrepreneurial spirit, weathered the storms of volatility and continued to build the infrastructure that would support Bitcoin's future growth. At the heart of Bitcoin's resilience lies its decentralized nature, a fundamental departure from the centralized systems that govern traditional finance. This decentralization is rooted in the very genesis of Bitcoin, embodied in the creation of the Genesis block on January 3, 2009. This block, the first block ever added to the Bitcoin blockchain, marked the birth of a new kind of financial system, one that operates independently of any central authority. The Genesis block, mined by Bitcoin's enigmatic creator Satoshi Nakamoto, contains a hidden message. The Times 03 Jan 2009 Chancellor on brink of second bailout for banks. This message, a timestamp and a commentary on the financial crisis of 2008, serves as a reminder of the circumstances that led to Bitcoin's creation. It is a testament to the desire for a more resilient and transparent financial system, one that is not beholden to the whims of governments and financial institutions. The decentralized nature of Bitcoin, made possible by its underlying blockchain technology, ensures that no single entity can control or manipulate the network. Transactions are validated and recorded on a public ledger distributed across a vast network of computers. This distributed architecture makes Bitcoin incredibly resistant to censorship and fraud, as any attempt to alter the blockchain would require the consensus of a majority of the network's participants. As Bitcoin matured, its practical applications gradually began to silence the doubters. Early adopters, drawn to its speed, low fees, and global reach, started using it for remittances, online purchases, and other transactions. Each successful transaction, each instance of Bitcoin fulfilling its promise as a peer-to-peer electronic cash system, chipped away at the wall of skepticism that surrounded it. The growth of the Bitcoin network was organic, driven by a grassroots movement of individuals and businesses who recognized its potential. Online retailers began accepting Bitcoin as payment, providing a wider range of goods and services that could be purchased using the digital currency. This growing adoption further fueled the demand for Bitcoin, pushing its price higher and attracting the attention of investors and entrepreneurs. The increasing adoption of Bitcoin was not without its challenges. The scalability of the network, its ability to handle a growing volume of transactions, emerged as a key concern. Technical hurdles had to be overcome, and the community engaged in spirited debates about the best way to scale Bitcoin while preserving its core principles of decentralization and security. Despite these challenges, the Bitcoin network continued to grow, demonstrating its resilience and its ability to adapt to evolving demands. Section 5. A Wall Street embrace, institutional adoption, and the rise of Bitcoin's legitimacy. A pivotal moment in Bitcoin's journey to mainstream acceptance came with the entry of institutional investors. For years, Wall Street had viewed Bitcoin with suspicion, dismissing it as a speculative asset with no intrinsic value. However, as Bitcoin's price continued to climb and its infrastructure matured, institutional investors began to take notice. Hedge funds, asset managers, and even traditional financial institutions like banks started exploring ways to gain exposure to Bitcoin. They recognized that Bitcoin, with its limited supply and growing adoption, had the potential to serve as a hedge against inflation and a store of value, much like gold. The entry of these institutional players, with their vast resources and influence, brought a newfound legitimacy to the Bitcoin market. The involvement of institutional investors led to the development of sophisticated trading platforms and investment vehicles tailored specifically for Bitcoin. Futures contracts, options, and other derivatives products were introduced, providing investors with more ways to manage their exposure to Bitcoin's volatility. This institutionalization of the Bitcoin market was a double-edged sword, bringing much-needed liquidity and stability, but also introducing new risks and complexities. Section 6, the ETF catalyst, opening the floodgates to mainstream investment. The approval of the first Bitcoin Exchange Traded Fund, or ETF, in 2021 marked a watershed moment in Bitcoin's history. ETFs, which track the price of an underlying asset, provide investors with a regulated and convenient way to gain exposure to that asset without having to directly hold or manage it. The launch of a Bitcoin ETF opened the floodgates for mainstream investors who had previously been hesitant to enter the cryptocurrency market. Prior to the ETF approval, investing in Bitcoin required navigating the complexities of cryptocurrency exchanges, setting up digital wallets, and managing private keys. This process, while not insurmountable, presented a barrier to entry for many traditional investors who were accustomed to the familiarity and regulations of traditional financial markets. The Bitcoin ETF streamlined this process, allowing investors to buy and sell Bitcoin shares through their existing brokerage accounts, just like they would with any other stock or ETF. The availability of a Bitcoin ETF had a profound impact on the market, attracting billions of dollars in new investment. It also further legitimized Bitcoin in the eyes of institutional investors and regulators, paving the way for the creation of more Bitcoin-related financial products and services. The ETF approval was a testament to Bitcoin's growing maturity and its increasing acceptance as a mainstream investment asset. Section 7. Bitcoin at the peak, touching $95,000 and reshaping the financial landscape. The culmination of years of technological innovation, growing adoption, and shifting public perception was reflected in Bitcoin's meteoric rise to an all-time high of nearly $95,000 in late 2023. This surge in price, driven by a confluence of factors, solidified Bitcoin's position as a major player in the global financial system. It was a testament to the power of decentralized technology and the allure of an alternative financial system that operates outside the control of governments and central banks. At its peak, Bitcoin's total market capitalization, the total value of all Bitcoins in circulation, surpassed that of many established companies and even some countries. Its influence extended beyond the realm of finance, sparking conversations about the future of money, the role of technology in society, and the potential for decentralized systems to disrupt traditional power structures. The journey to $95,000 was not without its share of volatility and corrections. The price of Bitcoin, known for its wild swings, experienced several significant pullbacks along the way. However, each dip was met with renewed buying pressure as long-term believers and institutional investors alike saw these corrections as opportunities to accumulate more Bitcoin at a discount. The resilience of Bitcoin in the face of these price fluctuations further reinforced its status as a store of value and a hedge against economic uncertainty. Section 8: From Skepticism to Acceptance. Bitcoin's journey into the public consciousness. As Bitcoin's price surged and its influence grew, so too did public awareness and acceptance. What was once a niche technology, shrouded in technical jargon and confined to the fringes of the internet, gradually seeped into the mainstream consciousness. Media coverage, once dominated by skepticism and fear-mongering, began to acknowledge Bitcoin's potential and its growing impact on the world. The narrative surrounding Bitcoin shifted from one of illicit activities and speculative bubbles to one of innovation, disruption, and financial inclusion. People from all walks of life, from tech enthusiasts and entrepreneurs to everyday investors and retirees, began to see Bitcoin as a viable alternative to traditional investments and a hedge against economic uncertainty. The growing acceptance of Bitcoin was also reflected in its increasing integration into popular culture. Celebrities, athletes, and influencers began publicly endorsing Bitcoin, further amplifying its reach and normalizing its presence in everyday conversations. Payment processors and major retailers started accepting Bitcoin as a form of payment, making it easier than ever for consumers to use Bitcoin for everyday purchases. Section 9: The Future of Finance. Bitcoin's enduring legacy and the decentralized horizon. Bitcoin's journey from a niche experiment to a global phenomenon has forever altered the trajectory of finance. It has challenged long-held assumptions about the nature of money, the role of central banks, and the very structure of the financial system. While the future of Bitcoin itself remains uncertain, its legacy as a catalyst for innovation and disruption is undeniable. The technologies underpinning Bitcoin, such as blockchain and cryptography, have far-reaching implications beyond the realm of cryptocurrency. They have the potential to revolutionize industries ranging from supply chain management and healthcare to voting and identity verification. The decentralized ethos that drives the Bitcoin community has inspired countless other projects and initiatives, all seeking to leverage the power of technology to create a more equitable and transparent world. Bitcoin's journey is a testament to the power of ideas and the transformative potential of technology. It is a story of innovation, resilience, and the unwavering belief in a better future. As the world grapples with the challenges of a rapidly changing financial landscape, Bitcoin's legacy as a catalyst for change and a beacon of decentralization will continue to shape the future of finance and beyond.